What's going on, family? Hope you're doing well. Welcome to another Stock Sermon Sunday here on our YouTube channel. Hopefully you're doing wonderful and having an amazing Memorial Day weekend. If you're live, let me know down in the chat. I'm not sure what happened to the banners. System kind of was acting up a little bit, and I was like, I can't wait any longer. It's about the value and the content versus sometimes how it looks. At least the quality is good here. So if you can hear me, let me know down in the chat. I'd love to hear from you. If you're rewatching, you're more than welcome to skip ahead to where I'm sharing my screen. But without further ado, I'll give it a little bit of time here just for folks to kind of trickle on in. I'm about, I said 4:30 PST, which is 7:30 Eastern Standard Time. But when I posted this, it was 5 o'clock PST, and I pushed it back 30 minutes just because I know folks are still kind of hanging out with family, maybe relaxing. Some people are still asleep, whatever it is. So I do understand that it is a Monday. It is a holiday Monday. So, and a holiday weekend that people may be traveling. So taking note of that. So, but we're still going to show up. Markets to open tomorrow. The New York session market for options trading and the regular stock market, the futures market has been open. So if you have been trading, I have some community members inside Leverage University that have been trading. So I'll give it a little bit of time here just to trickle on in. Let me see where the chat is, and we'll get this thing rocking and rolling. All righty. Let's see. Docs, chat. Perfect. What's going on? All right, I'll give it 2 minutes here. 2 minutes. In these 2 minutes, I don't like to just have lag time. So I like to give these 2 minutes or a couple of minutes here while people are trickling in. If you're hanging out or rewatching, it's been an interesting season as of last year, moving into the Vegas market. Only to say that I don't know about y'all, but I was burnt out on short form content. I just really was. I was burnt out on short form content. I got tired of how it was produced and, the quickness. And I said, hey, I'm just going to share my stories, my Instagram stories, and share bits and pieces. But I kind of moved out here for peace. And a lot of people are like, Vegas for peace? How is that possible? And I keep reiterating, like, if you haven't been off the strip, you don't know. So trying to expose that to some folks just in a season of chaos, or maybe you're trying to feel like, hey, I want to have a little bit more clarity in my life, a little bit more purpose-driven actions that are going on. Maybe I want to rebuild some relationships or find out and discover more about myself or about where I should be going. Then I do recommend that getting out of your environment, whether it be for a short term or a long term. So if it's, as I call it for my life coaching clients or anybody I talk to, immersion trips. You go on a solo trip or a trip with someone that your intention on that trip is to discover more about self and to enjoy nature and to have silent time, whether that's reading, writing, thinking, breathing, just enjoying the fruits of your labor by not vacationing as an escape. I don't like to call them vacations. This is an intentional excursion or trip that I was doing back in 2021 very heavily, and 2022 as well. So there's our 2 minutes there to give some brief, just space and time. So if you appreciate that, let me know. All right, let's jump into it. And also too, quick note, I'm going to be probably starting, since this channel has been so heavily focused on stocks, probably going to switch and start a whole new channel. So I've been in YouTube for 7-8+ years. When I was in my fitness days, I was a health coach, fitness coach. And back in 2016, 2017, 2018 time, and I was doing fitness competitions, and I had a fitness channel. So workout videos, things of that nature. So I say all to say that I love to talk about these things, which is personal development, certified in neurolinguistic programming and healing modalities and mindset structures and tactics. And I really, really want to talk more about those things. I can talk about it on my podcast and Leverage Talk and other places and spaces. But if it's going to be on long form here, I feel like, let me know if you'd like it. But switching over to a different channel, as this one has been heavily focused on finance and stocks. All right. So without further ado, let's jump into it. That is the final. All right. That is final. All right. Let's jump into here. Discord. And then go there. I don't know why it logged me out. It's weird. That is weird. All right. It's the beauty about the live. You can see exactly what actually happens behind the scenes. All right. Here we go. And share. Perfect. All right. I'll be checking the chat periodically here at the bottom. But without further ado, we'll go into our charts and discuss what is going on from the recap of last week, and then go over the internal fundamentals about what's going to happen this week. So if you notice the thumbnail, sell in May. Brian, can we address that really quick? What does sell in May mean? There's a term in the trading community and the stock market in general, sell in May and go away. And that is essentially saying that big stock brokerages, the New York Stock Exchange, stock exchanges in general, brokerage firms, as we call them, big money, typically like to, take their profits and run for the summer. Okay. It's a seasonality type of thing after tax season, finishing up, kind of rounding out Q2 in June. The summer months typically are a little bit slower. Now, we're in a Trump market, so it might be a little bit different. We're in the middle of also trade wars. We're in the middle of news. We're in the middle of a lot of other things. So it may be a little bit different this year. But from the chart perspective, it is a possibility that could be some profit taking at the end of this month, as we have made a tremendous run for coming out of April into the month of May. Okay, so I would not be surprised if there is some significant profit taking towards the end of May, beginning of June. There's a dip or a pullback that's a little bit heavier than the last couple of days. And then maybe we run up through July, and then potentially whatever happens with this trade war, 90-day pause, all those kind of things, we could chop around and choose a direction. Okay. So that is a sentiment that is, seasonality towards May typically. Okay. So Brian, how do you know that? Can we see it the past May? Yeah, you can. All right. So if we go here to last year, okay, and I go into May timeframe, you can see here typically end of March into the tax season, which is in April, you typically have some type of pullback. This is in 2024. All right, we run up in May, and then as you can see, profit taking starts to happen a little bit towards the end of May. Now, last year it wasn't major as we recovered because we were forming higher lows, higher highs, higher lows. And this is on a weekly time frame. So you see this pullback on the S&P 500 SPY, which was from 526 down to 511. That's a pretty big dip in a 2-week span towards the end of the month. So as you can see in this 1 week alone, at the top of the candle, we push up from 520 into 524 and sold all the way down into 511. So if you think about it, in 1 week, it sold off roughly 10 points. Okay. And that's roughly what we're seeing about right now. So you can expect potentially a bigger pullback towards the end of the month of May. Let's go back into 2022, which was more of a kind of a bearish market, which is where we've been seeing for the beginning part of 2025. Let me turn off some of these so you can see a little bit clearer. And let's go into 2022 and go into May as well. All right. So look at this sell-off at the beginning of the year, right? Kind of like what we've been having now, right? And then May in 2022 was more bearish here coming into the middle of May. We pumped up towards the end of May, and then there is the kind of beginning of June, kind of end of May, which is profit taking, which is in the first week right there. So anywhere around kind of this area, right? It's a little bit more consolidative. It's a little bit more kind of, hey, if I'm up, I'm going to take some profits and then buy the dip back up wherever that may be. Okay. So as you can see in 2022, we popped up, sold off, then we rose through the remainder of the summer throughout July and August, and typically, September timeframe, August time frame into October are more bearish in nature again. So there's that sell off one more time from September through October. Okay. So can we have the possibility of seeing that again? Yes, we can in this area. Okay. And I'm going to give you some levels on the S&P 500 SPY, more specifically, what that's going to be looking like. Okay. Now let's go into our fundamentals for the week. And do we have anything? First of all, it's a short week. All right. So we got to be careful about which contracts we choose. If we're trading options, if you're trading futures, right? Just be careful of the volatility. We need to make sure who's speaking this week. All right. So if we go into economic calendar, I'm also going to go into our earnings for this week as well, as we're rounding out the earnings season. Thursday, Tuesday, you see here, Memorial Day holiday. Tomorrow we got durable goods, consumer confidence, 10 a.m. data. We got GDP that's going to be pretty big, but it's the first revision. Pending home sales, that's going to be big. Any 10 a.m. data is always pretty, it moves the market pretty decently. A lot of Fed speakers. Last week we had a lot of Fed speakers that kind of consolidated and chopped the market up a little bit. So that's going to be interesting. And then Friday, big PCE data, consumer spending. That is going to be the sentiment. That is going to be the end all be all, in my opinion, how that comes in. And that could be our catalyst, right? Personal consumption expenditure and consumer sentiment at 10 a.m. Now, as we know, as consumers, the consumer sentiment has been kind of iffy as of late. If you're asking yourself as a consumer right now and saying, hey, do I like the nature of the economy? Do I feel like it's moving in the right direction? Majority of people would say, yeah, I don't know. I can't really see it just yet, but I'm hopeful that it's going to turn around and prices are going to go down, interest rates are going to get cut, things of that nature. So they're taking that data into consideration. And if that consumer sentiment comes in negative in any type of way, like it did last month or 2 months ago, then we could sell off pretty drastically. And this will be that end of May and on a Friday. All right. So I do believe we could see that hefty pullback. Now, one thing that you don't see on here that I haven't pulled up just yet is earnings. All right. NVDA has earnings after hours on May 28th. So you have NVIDIA earnings, you have minutes of FOMC, and then you also have GDP, and then you have PCE. So what I tell clients or anyone that I'm talking to about how to read fundamentals, meaning the news, the data, let's just think, okay? If you think like a hedge fund, if you were up significantly, which is what most people are, and we're approaching the end of a month, if you're up significantly going into the end of a month and you want to go on summertime vacation, you want to make sure you protect those profits, what do you think you would do with data this heavy and also the minutes of the FOMC and also NVIDIA earnings that's happening after hours and you don't know which way it's going, right? Because guessing and saying, hey, I'm going to hold on to this could go higher, the risk to reward opportunities are getting very, very short to the upside, okay? Because we've already gone from the lows back in April now into the end of May, roughly 18, 20%. In a lot of stocks, it's up 50, 100% from those lows. So could it go up higher? Yes. But if I'm putting this on public record here on this live right here, and we come back to it, I'd probably say it would probably be unlikely if it went a little bit higher and then sold off or some type of bull trap. That's just my sentiment right now. But as always, as a trader more specifically, you have to keep your eyes and mind open and head on a swivel. As a long-term investor, I would be a little bit more mindful if you're up on a lot of your positions. Analyze those positions this week and say, hey, how much do I have in these positions? What's my game plan for them? Meaning, is this a 10-year hold, 20-year hold? As I tell people, great. You don't care if it drops back down, it'll go back up, right? But if you are like, hey, I want to kind of lock in some, move it to cash and rebuy some other things because I'm up 100% and I have 100 shares, 50 shares, you may want to trim 10% off the top, right? I don't know. That's up to you, not financial advice. I'm just saying that just because you're holding long term for a lot of things does not mean you can't take profits. It doesn't mean sell everything, but it just means consider, what do I do to protect myself if there is a hefty pullback? Buy more? Great. Or what if I'm out of cash? Okay, well, you might want to free up some cash from some of those positions that are significantly up on. Okay. All right. Let me check chat here. Are we still good? Just making sure. All righty. Saying hey everybody, what's going on? Hopefully you're doing well. If you can put down the chat for me where you're tuning in from, who's here, that'd be awesome. Right? I know it's Memorial Day weekend and Memorial Day more specifically, but a lot of folks, you know, if you're, as we say it in the holiday season, if you're truly a reason for the season, then you ate, you did your normal thing, you rested, maybe you worked, you did some other things, hung out with the family. Cool. Shout out to all veterans out there. If you do have any veteran families, or you a veteran yourself, thank you for your service. But yeah, I'm here regardless. All right, let's jump into the charts, my favorite place. Let's go over some levels for SPY and analyze this chart more specifically. Okay, so we're sitting on a monthly chart and we're approaching the end of a month. So when we're approaching the end of a month, we want to analyze the monthly candles to see how those candles are looking. If we can see here, we have a big pin bar candle from the month of April when Trump came in and said, hey, 90-day pause, we're making some type of deal, so on and so forth. Okay. Everything got bought back up and we recovered a lot of those gains. And we can consider that this was a higher low from this 2022 high. Okay. So you can consider that. But as I said before previously, the state of the economy is still a little bit shaky, right? So if I'm analyzing this, yes, we're sitting almost back to all-time highs, but if you can see this monthly candle, right, the monthly candle is starting to show a little bit of selling pressure on the top of the candle, right where we sold off in the month of March, okay, at 594, and we broke underneath 600, okay? So we've got a couple of scenarios that could happen this week. As I said, we got to keep our head on a swivel. And the scenarios are based on the catalyst of the news that's coming out. So NVDA comes out on Wednesday afternoon. Okay. I'll give you my sentiment on NVDA. I personally think that it's going to be a little iffy. It might shock some folks. I'm not trying to be the person to sit here and say, hey, do X, Y, and Z. I will tell my community inside Leverage, if you're in there in one of our channels, you're at that specific level, what I personally think. Our earnings readings have been pretty on par as of late. And if you really look at NVIDIA, they've been struggling on their earnings as of late, the last couple of earnings. So Jensen's trying to hold it up. They're trying to figure this thing out, but it's been all these guidances. Okay. So if NVIDIA comes through somehow, some way, and we get above 600, yes, we can push up higher. Okay. So I always want to keep that in mind, as I don't want to come here and say, hey, the market's going to sell off immediately when the market is meant to go up. Okay. So I always give a bullish case first, just to say, hey, I know some of y'all are bullish. I know many people are bullish long-term. Great, Brian. I don't really do the downside like that. So I don't want to be the bearer of bad news coming here talking about the downside all the time. So if we get above 600, we could make that little push to end the month and maybe we end off strong. That's a possibility. Okay. So that is our breaking point, would really be above 600 in my opinion, right? 598, we could still see a rejection. Anything, underneath 600 still could see a little bull trap fake out. Okay. And you're like, Brian, you don't see these big selling candles. Why would I even look at the upside there? You have to consider that the futures market is up after hours. So we're already kind of recovered back up slightly, almost 1.5% on the NASDAQ. So we'll be up in the morning and there'll be a slight gap. So I'll talk about that as a strategy in the morning, what we could look at on the option side and for people in the futures market. Okay. If it stays up in the morning, there will be a slight gap up in the morning. Okay. Now let's go into our weekly candle here on SPY and take a look at this weekly candle. Okay. Again, we're rejecting. If we go into the weekly, we're rejecting, and we sort of formed somewhat of, I wouldn't say a bearish engulfing here necessarily, but we formed a lower high. Okay. If you can see that on a weekly, that is the first kind of lower high close. This candle closed from last week closed up here, and then the candle closed this past week down here. So that is a lower high close from 594 to last week's close of 579. All the other closes have been fairly higher. All right, this one's a little bit lower. Yes, if you can see there, 567 versus 565, but otherwise we've been closing higher, right? Higher lows, higher lows, higher lows, higher highs, higher highs. This is the first break of structure. So anytime we have a first break of structure on a bigger time frame, such as a weekly time frame, repeat after me, what do we have to do? Typically, there's some sort of retest, okay? So if we are retesting a trend line of a lower high, I would draw it something like that, right? And I would want or try to see if that trend can retest somewhere like that. So that puts me roughly right at our rejection point last time, which should be right around 586 or so. Okay. Now there's other levels here that will serve as resistance this week. And tomorrow, the next couple of days would be 586, 587. I want you to mark those on your charts. Okay. See these 586. If we can't really get above that 587, that is the first rejection point, the bigger rejection. Okay. If we can't even get above the previous week's high, which would be roughly around 583, that is where the next kind of rejection would be 583. As we go into the daily time frame in a minute, I'll show you what that looks like. But 586, big rejection, sellers stacked up there. That was a former support turned resistance. Okay. 583 is also former support. And then when we pushed underneath it, we started to reject underneath that 583 and came lower down. Okay. And we closed at 579. Okay. So those are the two big areas you would sort of want to see it try to push up into. Right. If we recover the next 2 days before NVDA earnings. Okay. Something like that, maybe. And then maybe it forms a little head and shoulders. And then we come down. That's a possibility. Okay. So that's what I'd be looking for. Now, again, like I said, as we're working down our time frame, what if we somehow get above that 587? Okay. It's going to try to retest the high, something like that. And I really do believe a catalyst is going to have to happen for us to just shoot straight back up above 587 and then hold 586 and then consolidate and start pushing back up into 590, 591, 592, things like that. Okay. So we know when these big falls happen immediately, people start chasing the downside immediately and don't confirm it. And then it squeezes back up and then it starts to fall over again. Okay. So what do we typically do in leverage? We're typically a little bit more patient on these. And if there's an opportunity, if it's already up there, we'll see how it reacts at those levels and then go from there. Any levels that I'm mentioning here, I'll look at it on the futures, but you can just mark those and then mark the same on the futures market. Okay. So here's ES, as you can see on a daily time frame. It's already kind of trying to form, a recovery candle here. And that would be close to 5,900, that psych level. Okay. On ES futures, and then there's SPY. So it's pretty much right at 590, 586, 587 on SPY after hours. If I'm checking here, let me make sure. Yeah, sitting right at it. So there'll be a gap in the morning. sitting right at 585. So see that level is sitting right on resistance in the morning. So if it stays there and it, starts to reject it immediately, then that's at our rejection point almost to the T. All right. So just watch that 586 level. That is resistance until it gets above, in my opinion, 587 and starts holding there on bigger time frames. Can I get a 1 in the chat if we're good there on SPY? I'll go a little bit lower into like the 4-hour time frames on SPY just to make sure, but just want to check in with everybody. Everybody good? GameStop. Cool. I'll go over that. That's fine. GameStop. Yeah, start putting anything that you want me to go over technical analysis. I'll go ahead and cover it immediately. Just because I know some folks are coming in, coming out, and you don't want to wait for the full analysis. I definitely understand. So I'll do GameStop really quick. All right. So the first thing you want to notice on GameStop here, levels. I want to mark support and resistance. And I know this is more of a meme kind of stock or whatnot in my opinion, because it's very, very volatile. People trade it because they can, risk to reward. They can make a bunch of money very quickly, right? So you got to know which way and where your entry is going to be. So if you can see here, it's already moved from $20 to $32. So if someone is going to immediately enter into call options on GameStop, if you're trading options on GameStop, you have to respect this level here. Let me see what it is after hours really quick. GME. Yeah, sitting right at that resistance point at 34.30. Okay, so you have to respect these resistances here. And I'm only speaking because a lot of folks, they hear these things and they wake up and they immediately jump into calls and it pulls back first just because it looks bullish. Okay. Now, if it clears above 35 and you want to trade it, clears above 35, yes, you can enter calls confidently with a move back up into 40. That's really where it's trying to get to. Okay. In the short term. Well, Brian, I think it's going to 60 and 65 and 70. Yeah, but it's got to clear above each level first. Okay, so that would be my advice if you're trading options on GameStop. If it clears above 35 with a break and a retest, you can confidently take it up with a stop loss back below maybe 34.50 or so. Okay. Now, if I go into a tighter time frame here, it's coiling into a move. Okay, if you can see here, it's coiling with higher lows. If I get rid of that, it's just consolidating and starting to break out of this move here. And if it breaks above that 35, it'll make a move into 40 pretty quickly, 50 pretty quickly. So just have $10 increments would be my advice. Okay. Right there. Starts forming from lower highs, lower highs, lower lows to higher lows, higher lows, higher lows, higher highs, and then trying to form another higher high above 35. That'll be my recommendation there. So hopefully that helped. Stego, hopefully that helped. Just kind of give you a little insight into that. I know I have, I'm very keen on, when people join in, I'm not sure who they are sometimes. So, if you're hearing these things and you're considering it, it's like, hey, should I do that? Should I trade that? Please be mindful that, if you are more advanced, then you just understood everything I said. Right? If you're questioning it like, man, that could be money making, it'll go to here and go to there, but you don't know how to enter options properly. You don't know what contracts to choose, things like that. I would shy away from things like GameStop personally. Any type of memes that you see, any type of Reddit threads that you see where people make money on GameStop is typically they enter, hope, pray. It's a lotto type of situation, and they'll trust the charts a little bit here, but the entries are going to be keen for more advanced individuals. Right. So the reason why the person's asking that too is because there's a lot of hype. there is some movement on it and is forming some higher lows and starting to form a bullish candle back on the reversal here. Maybe consider that somewhat of an inverse head and shoulders right here. I don't really like to look at it on those time frames, but you could consider that volume off that right shoulder to take out that previous high and shoot right to 40 and 50. Does that help? Give me a 1 in the chat, or if that answered your question. If you get a pullback in the morning, maybe get a pullback first. I would take a look at 30. Maybe it pulls back to 30. All right. See, it broke above that previous high right there, which was 29.77. Could it pull back first and then take off? Yeah, it could. So watch that pull back to 30 and then go, or a breakout above 35. Cool. All right. Let's go back to our regular scheduled programming. If anyone needs any other stocks they would like technically analyzed, let me know in the chat. All right, QQQ levels. Again, on a monthly time frame, still forming lower highs on a monthly time frame from the highest high, which would look something like that. Now, if you look at it here, again, it looks very, very bullish. Big pin bar there, followed by a nice monthly candle there. Another higher low, higher high, higher low. So it's all dependent on the data. That's really what it's going to be. Now, if I were to analyze it here on an RSI stance, I would say it's getting up there. Weekly time frame's got a little bit more. Daily time frame, as you can see, getting up there on the daily on the RSI. So for those that don't know what that means, it just means a little bit overextended. That when that RSI gets up above that 70, it doesn't mean to the point and to the T that, it's going to start selling off immediately. It just means be cautious that some profit taking could happen, okay, before it goes back up or before it finds a bottom. You can see here, same thing when it gets up here on QQQ on a daily RSI, double top there above 70. Look at where the chart did. It went from 500 back down to 421, okay? So you never know how big the pullback is going to be necessarily. There it is, a small one, 409 back to 392. Okay, so roughly a 20-point move back to the downside. So this is going to be very interesting. Another thing here is that we've got gaps below. That's what piques my interest on the downside. We've got gaps below that need to be filled. They don't have to be filled, but typically there's some alignment coming in. We got big news data. We got NVDA. We got catalysts. We got a lot of things going on that, hey, we've made a big run up from these lows back in April. We've made a 2-month run up, 30% in 2 months on QQQ. Great. Awesome job. Made your money in your long-term portfolio. Made your money if you bought this dip and you're trying to hold. But it would not be a shock if that happens. And I know it looks crazy. It would not even be a shock, because guess what? If for any of my Leverage University members, I know it took a while to happen, but did we not say that at some point in 2023, all 2023, as that RSI got up to the top, there will be a staircase up and an elevator down where it gave up pretty much the whole 2023 move, right, in a month and a half. Okay. So it is very much possible when you have these gray areas, as you can see, these gaps that need to be filled back to the downside. Okay. So they will get filled, but will they get filled in one fell swoop, or will some of it get filled, try to retest, sit up here throughout the summer, and then in the fall time, when September comes in, when the 90-day pause is done, maybe we do something like that. And then we come down in the fall. That's my sentiment. I'd like to just put it on recording just so I can come back and look at and analyze my analysis. Okay. So on QQQ this week, I'm just giving you a big time frame look at what the possibilities are. But QQQ this week, what we want to look at is levels to the upside. Where is it now? Let me look. QQQ. Sitting at 515. Okay, so 516 is our resistance from last week. Okay. Right at that 516 is where it started to get heavy. Rejection, top wicks, top wicks, top wicks. Closes underneath this 516. It started to get drastic. Okay. So it's up here right now. So you have a candle up like this right now in the futures market. When we wake up in the morning, does it get above 517? More likely 518 would be my level that I would want it to clear above. And then head to 520. Does it make one final last push back up to 520 like that? So watch QQQ in the morning. If you're a QQQ trader or NASDAQ trader or investor, 518 would be the ideal level that you would want to see clear to head to 520 and then maybe even push back up in the highs like that. That is a possibility. If you look at this, could this be a, big bullish flag to retest the high? It's possible. Okay. So do not keep that idea out of the question. So 516, if we do a gap and a go, 518, push up into 520, see how it reacts around 520. Okay. Now, what if we wake up in the morning, it's sitting at 516, 517, and there's going to be a gap in the morning. Okay. Let me turn on the after hours, see if it shows it here. Okay. So it's all the way up here. There's going to be a gap in the morning. You see this red line? Tries to push up here a little bit further. This dark black area is when the market's going to be open in the morning. We're sitting up here right now. And it just falls right back down. Okay. So some levels below that you'd want to watch would be 512. And then ultimately above that 510 area. Okay. These are all supports that could hold if we pull back. Okay. So I want you to watch that tomorrow, that we don't get faked out on that pullback if it does decide to fill that gap back to the downside. Okay. Why? Because what could happen? This could be a higher low and we could squeeze right back up like that. We've seen it happen before. That's why we don't chase, as we say, in the market. So if we see a big red candle, we want to know where it's headed. Into your puts, find an entry for your puts. Great. Did you find an entry? Get in, get out. If we're day trading, and then respect these support levels. 510, 512. Okay. 510, 512 on QQQ. If they're above those levels, all right, then we're going to consider it to try to swing back up to the high and try to retest that high. Okay. Now, Brian, what happens if it breaks below 510? If we get aggressive for some reason, right, and we get underneath 510, then you'd want to turn that 510 and that 512 into a resistance again. Okay. It would pop up like that. And then we can continue that downside. We good? So for any of my QQQ folks, mark 510, mark 512. Okay, that whole zone right there tomorrow could be just a simple pullback zone to go higher. Okay. So we'll watch that. Now, for those that like to scalp with me or those that say, Brian, if it's all the way up here and we closed down here yesterday, won't there be a big gap in the morning? Like a big gray area in the morning that looks something like this? Yeah, most likely. Most likely. So guess what? We can find an entry for some quick puts, or in futures, we could scalp some sells. And if we see a failure to go higher, find a lower high, then yeah, we can catch that gap back down to 512. Okay. So for anyone inside Leverage University that trades live with me, or if you trade on your own, consider that if you want to trade the pullback back down immediately, consider that anyone that swung calls or maybe wants to take some profits first thing in the morning, there could be a fall off open immediately. Okay. Cool. So that could be a quick little move right in the morning, not even have to think about it. Just make sure we know where the top is going to be. Start entering some puts, entering some sells, light size starters, and then add to it as we continue. All right. I know some of y'all like that idea. You love those gap ups. So go ahead and put that on your sheet in the morning. All right. IWM. We good on QQQ? This is good so far. Can I get a 5 in the chat if you are participatory? Just let me know. I'm not going to ask too much of you today. I'm trying to be short and sweet. Get back to your families, the evening time, relax, get your favorite movie, show, dinner time, all those good things. Good. All right. Let's go into IWM. Let me see where it is. IWM. All right, sitting at 204.50. Resistance on IWM is 206. Okay, 206. I want you to mark that on your charts. It's right there at 206, 206.50 or so. And I'm putting it in yellow simply because that is my pivot zone. So it's up here. It could break up and squeeze higher in the morning. Maybe it goes to 208, fills that gap, and then falls. Right? So that's why we want to typically be a little bit more patient. If the market is strong pre-market, it could continue the strength through the morning and then sell off. Right? So IWM, it's sitting up here at that 206. If it gets above 207 and starts to hold above 206, you just want to look left and consider what it did last time. It got and held above 206 and started to sit, and build right back up to that upside. Okay. So could you trade it to the upside from 206 to 208? Yeah, you could. But what if there's a massive gap here and you just want to let it push up into the top end resistance because the move's already been made? Wait till it gets up, gets a little bit exhausted, maybe a couple of 15-minute candles, maybe the first 30 minutes in the market, maybe the first hour into the market. That's been working well for a lot of us. And then just find where the top is, find what the market's doing, trending, and then take it back down for that gap fill. Okay. Now, what if it doesn't? Let me put this out there. This has happened before. What if the market is just strong tomorrow, Brian? What if there's no sell off or anything like that, no profit taking, and I try to enter into some puts? Okay. Remember, we have all of that data and we have NVDA earnings. If we continue to squeeze back up, maybe fill the, these gaps, IWM, fill the gap on, I believe there's a small one on QQQ and SPY. Let me go back really quick. Thought there was like a little small one, not that one. Maybe it already filled. Yeah, not that one. Yeah, maybe it already filled. I believe it already filled, but there was a little small one here up at like 595 or something like that. I don't see it here anymore, so maybe it just tapped up there. But anyways, what if the market just decides to be strong tomorrow and finishes green? All right. Then you want to consider the end of the week. Everything's starting to dial up, right? It recovered before all that big data, right? And if those gaps haven't been filled back to the downside, could that be that end of the week sell-off that we get? You get me? So that's why I'm very open-minded, typically the first day of a new trading week. More specifically in options for futures market, it could do the same thing, right? We could just recover and just sit here. Okay. Remember, this is a channel and then also a channel. Okay. Right there. You see that channel? So if you mark off those channels, you can see that if it gets above back into this channel, then it's just going to try to retest the high. But if it stays underneath this channel, rejects, then we're just going to fall lower. Okay. So that's what we really don't want to see necessarily, is it get up in this channel and then just chop. All right. So that's why I'm always, if you see on my Monday trading days, or in this case, Tuesday trading days, I'm a little bit more chill, because I'm trying to see where the actual levels are rejecting, or are we fully recovering and swinging all the way back up. Okay, we can clearly see that there's selling pressure, right? But with this market, we can see that they just recover. Things happen over the weekend with Trump and other news data. Okay. So that's IWM. Watch 206. Mark this channel off. You can see those lows right there. I'm just giving you a brief level here, 206.50 or so. If it gets back in that channel, it's going to just kind of squeeze back up into that gap fill right there. If it can't, start sitting underneath there, then we're coming right back down. Okay. My bigger support areas, as I'm rounding out these indices, okay, more specifically SPY, QQQ, IWM. I know we have DIA, or the Dow Jones. For my futures folks, that's the US 30. So if you ever want me to cover that, I can. But my bigger area on IWM, if we have that big like fall or big pullback, we'll be down into that 198. Okay, 198, 200. Right, that's how that pullback would look. Okay, if it happens at the end of this week, or if it happens at the beginning of June, which is next week, right, it would be that 198 as a big level on IWM. That would be the retest, big pullback. Okay. Now, if we get underneath 197, then that's where the other gaps would come. But I'm not really looking at those, because I'm looking at this area right here, 198, 198, 198, 198, and then 198 again. Okay. So if you want to mark that bigger area, it's like, where is it headed, Brian? If it does 200 and then 198, if we get that big rejection and a lot of selling pressure coming in. Okay. QQQ, the big area is 500. Okay. 500. What do we do at, 500, 501? I would even consider really just the start of this gap. So if we get underneath 502, that selling pressure could just, start. Okay. Even more. It would look something like this: get underneath 500, turn that into a rejection, and then continue down further. Okay. And then we would just slowly trend down into probably this 493, but it's got to get underneath. That would be a pretty big pullback, in my opinion, would be right there. That'd be a 4 to 5% pullback, which we've seen very simply in the Qs or the NASDAQ. So underneath that 5, maybe you could look at starters at 501, but if we're underneath 500, that's where that gap is started. So if you just want to mark that, okay. If you want to get a bigger look at what a bigger piece would look like. If NVDA has awful earnings, that's what I'm talking about. PCE, consumer sentiment, comes in poor, that gap's going to get filled. All right. Now, don't forget what I said at the beginning of the video when I was talking about risk to reward. Okay. Well, Brian, I think NVIDIA, there's no way they're going to miss on earnings. Yeah, they might not miss on earnings, but if you've noticed, they've had some bad headlines. They've been trying to fiend off the tariff situation, right? It's just kind of very iffy. Okay. So in that case, you've got to look at risk to reward. Okay. If the market does go up higher, right? You're looking at 525 to maybe 530. Okay. So you're looking at a $5. I know we're at 509 right now, but we're at 516. If we break back up to highs and get back up to 523, the reason why you see a lot of traders or investors saying, hey, it could go up higher, but you're seeing maybe some, if you watch other videos outside of mine, maybe you're watching another live tonight or tomorrow, whatever, you'll hear this sentiment typically of the risk to reward, prepare for the downside. Because if I'm a big money player, why would I want to risk millions of dollars to get another $5, $6, $10 out of my move? So would I rather lock in my profits at 30+% up from the lows, right? Take my profits and run into the summer, go on vacation, do whatever, right? Pay off some debts, whatever it is, buy back up the low? Or do I want to risk like a retail trader, retail investor, and try to, man, we're going back to all-time highs, and you're trying to take it from 520 to 540. Great, let it go there. Great for your long term. But for a trader, more specifically, the risk to reward looks like this. If you're in calls, trying to hold calls in a lot of the major stocks, okay? I'll get to some of them towards the end of my videos. I typically do things that are longer dated, things that have been beaten down. I'll give you some of those that I've been looking at. But if I'm looking at a long position right here on QQQ, and I'm trying to get to all-time highs, there's how your risk to reward looks like. Okay. Maybe here you keep it at 500. You enter here and you can't even confirm this until it breaks out. So that's really how it looks. So look at that visual. If I enter calls here, I've got to keep a tight stop because it could just fall all the way back down to this low of 505 and 500, or I could just scalp it back up to 523. But if you're thinking like a big money player, I'm talking about billionaires, is this the type of look that you would want to see if you're about to put millions of dollars into a position? No. So when you hear people teaching this, or just, I'd say just sharing their information, right? This is the look that we have in our minds, saying, either you're going to wait for a pullback. If you're only a person that's a bull, you need something to look more like this. Fill that gap, get your support levels below. Maybe it's right here at 493. Get that to move right there, pull back, fill that gap, reclaim 493. And now your risk to reward looks like this. Now you've got a big runway to take it back up to highs like that, because the pullback has happened. So that's what we're thinking. Okay. Don't mean to reiterate the point, but I know I have a lot of, new people that watch these videos and they're just like, I don't understand. The market's strong. Why would someone think a pullback's going to happen? You see it all the time. All right. Cool. Then they're shocked. Man, the market's tanking. It's just like, what more do you want? We're up 30% in 2 months. Just when people get greedy. All right. Hopefully that helps. So risk to reward to the downside, why you see people looking at puts or taking profits or considering puts at this point, is because the risk to reward looks like this. So maybe they give it to 530. Just say you have a big money player, big money trader, and I'm talking about a billionaire that's like, hey, I'm going to start entering into my put positions now, right? Look at QQQ to June 20th. And I'll show you the amount of interest that is on the put side. 480s, 85 interest. If I go all the way down further, it's probably more than that. I think it got up to 100,000. Believe 71,000, 85,000, 53,000, 63,000 at 500. And you're starting to see this side, which is the call side, starting to diminish just a little bit. You see how these open interest numbers are a little bit lower, saying, hey, I don't want to trade against this strong market. What if NVIDIA has good earnings, blah, blah, blah. But it's getting a little bit lower on that side just because in the short term, you can kind of tell here that they're expecting some type of pullback. So that put positions or the sell side is the volume is beginning to pick up. So that's how it looks on the sell side right now. Very little risk. If it breaks above highs, stop out, or maybe give yourself to 530, another psych level. Maybe someone's like, man, it's going to all-time highs. Okay, cool. Still goes all-time highs. Still got those gaps below. They put time on their contracts. They're still looking at that because the state of the economy. Rotation into Bitcoin, rotation into, cryptos, rotation into commodities. You see gold going up right now. So that's all sell signals for the overall market. All right. So that's my sentiment, is the higher it goes at this point, or the more it consolidates up here, if it breaks out above highs and you're like, hey, it's going to all-time highs, great, cool. That's fine. Your long-term is doing great. But if you're a trader, just be very mindful up here. Do not get trapped at these highs with all these gaps back down to the downside. Okay. All right. And I'm going to sum this up. If anyone's new to my channel or new to these live Stock Sermon Sundays, I do sum it up simplistically. Like, hey, what do we do for the week? Like if you tell me to look at something or to do something, what contracts, what should I look at? Just tell me simplicity. I do that at the end of the video. All right. Let's go into NVIDIA. Let me check the chat really quick. Make sure y'all are good. Any other questions, thoughts? Bought a call for 276 on May 1st. I'm up $264. Awesome. Yeah. So you're already up on GameStop position. 30 call, by the way. Okay, perfect. You're in the money. Awesome. Yeah, just same sentiment. As long as you're in the money, they're going to work well. What's your expiration date? Exactly, Neil. So I appreciate y'all. Think it's going to come down and retest 333. Yeah, Lloyd, I'll get to gold as well. Cool. We're all on the same page. Appreciate y'all. We're on the same page. Let's go to NVIDIA really quick, because I think that's everyone's sentiment for this week, is what is NVIDIA going to do? I really think NVIDIA, personally, it wants to get to 140. Like, it tried to. I really wanted it to, because I was going to, load up on some puts on NVIDIA. I really wanted it to get to 140. But as you can see, with the sentiment of the market and the market getting a little bit overextended, is pulling back with the market. Here is, and let me know if you're inside of Leverage University, or if everything that we've been saying has been kind of playing out with Lilly earnings, other earnings. If you're getting my sentiment of earnings, you see all these gaps down below. Okay. NVIDIA has been pushing up into their earnings. Okay. While everyone is hyped about NVIDIA earnings, yes, they could go higher. I'm not going to bet against NVIDIA's earnings necessarily. They're not going to beat. But as Neil said, the last earnings that NVIDIA has had, look at the sentiment. They had an earnings beat here, but the forward guidance, or Jensen, was saying, yeah, we don't know where NVIDIA is going right now. We need more information. The future of AI and chips is 5 years ahead, 5 years forward thinking, whatever. And stockholders don't like that, because they're looking at Jensen like, hey, I thought we were closer than that. So you see this earnings here, that right when we were pushing up into their earnings in February, okay, we sold off from their end of February earnings, and we sold off from roughly 142. And after their earnings, sold all the way off back to 104. Okay. So it's given me the same type of vibes. I really don't think that NVIDIA's earnings numbers are going to change that drastically from Q1, in my opinion. Q4. This is Q1 earnings that they're reporting. I really don't think that they're going to change that drastically, seeing what has happened in Q1. That's just my opinion. So with that being said, I would not be surprised if this pulls back pretty heavily. Okay. Now let's see what the expected move is of their earnings. NVIDIA typically has roughly like a 10-point move on their earnings expectations. This will tell you, if you haven't watched my earnings or how to trade earnings video, it's on the channel. You can know how much a stock is going to move typically based on their earnings, one way or the other. And earnings, where is he? Bear with me, everybody. Bear with me. I'm trying to get everybody out of here. I don't like a lot of lag time when I'm on live personally. Okay. I'll see if he has it up here this time. NVIDIA. Okay. Roughly around 8% plus or minus. 8% plus or minus on NVIDIA's earnings this week. We got C3AI, which will be a pretty big mover there from their earnings, roughly 14%. So Okta is going to be a big one as well, 12%. But yeah, NVIDIA earnings roughly around 8% on the movement of their earnings. Dell will be interesting, around 10%. Ulta, always a good earnings move as well. So let's see how much that would be. Plus or minus. So just say wherever their earnings is going to be. So NVIDIA, I believe, is like at 135 or something after hours. We'll see if it drops here. That'd be down to 120. So yeah, that roughly that 10-point move. We could see NVIDIA down to 118, 120, 123. So just say 120 to 123 is where NVIDIA would fall to if they missed on their earnings, and they would continue most likely down to 118 if they missed. If they beat, we're talking, 140, 141. So either way, NVIDIA is going to push up into resistance, literally right up into it in an overextended market, and then sell right back off, right? In my opinion. But if NVIDIA gets above 143, that's when, it's going to try to retest highs and push higher. So that's what I'm saying for NVIDIA earnings. Is it worth it to do an earnings lotto? For anyone that knows what that is, you could consider it. Maybe you could consider QQQ on NVIDIA's earnings if you want to. Maybe you can consider another something like AMD. You could consider that as well. If NVIDIA has poor earnings, we know the semiconductor sector is going to fall. So that would probably pull AMD back underneath 100, most likely. Sitting at 110 right now, I think like 112 or something after hours. So it could pull AMD back to closer to 100 if it does have bad earnings, or it could push AMD up into the mid 120s. So you could trade NVIDIA earnings, maybe not having to pay the premium, as the implied volatility is going to be pretty high. Let's see what the implied volatility, 170%. Let's see. May 30th. These are probably going to rise, but that actually is not that bad. 70%. Not 100+% like I would think, but 120, a lot of interest on those. 18, a lot of interest on the 115s for the end of the week. If they have poor earnings and also PCE comes in bad, we could see NVIDIA back at 115. But if they beat, people are looking at 140, 145, which I would not be surprised at either. So it's all lining up either way. Either way it goes, I think we'll cool off by the FOMC meeting. Either way. FOMC meeting for next month is June 18th. So mark that on your calendars, June 18th, the week of June 20th, any contracts of June 20th, there's going to be selling pressure coming into that day or in that week. That's why you see a lot of individuals looking at those. Look at NVIDIA's put side into June 20th. 115,000 interest on those 110 puts for NVIDIA. Just saying. I am just saying. Very little interest on the upside that high for June 20th. So, yeah, I think that's a good contract personally. 115, 110. I could definitely see NVIDIA back at 110, 115 by June 20th, whether it goes higher or lower. So I'll resort back to this video when that happens. Crazy. Isn't it wild that folks on free Robinhood Facebook groups and other groups, and even maybe some of you that are just starting this, like how much information is on charts and how much information is in the market, but people still, guess with their emotions. I'm more so talking about trading, or they're surprised when something happens. Like, man, why is NVIDIA tanking? They needed to pull back. Like, the concepts make a lot more sense when you understand what's actually going on, and then you're not shocked. You just pick it up on a dip. Great, buy more. Right? But if you only think the market goes up every single day, every single time, then you're going to get shaken out of a lot of things, in my opinion. Cool. All right. Is too slow. Jay Powell speaking at it. Isn't he speaking today? Maybe I remember saying that. Like, isn't Jay Powell speaking right now? Or did he speak yesterday? Jay Powell. I think he's like speaking like right now. Oh, 17 hours ago or yesterday? Or you're just mocking Jay Powell speaking? He was like speaking this weekend. Maybe it was at a graduation. So got a little distracted there. All right, let's keep rolling. Wrap this up. Anything in the chat that y'all want me to cover as far as specific? SOXL is a better hedge on NVIDIA earnings. Yes, you're absolutely right. We're absolutely right. Yep. It's a lot less expensive too. So if y'all remember me telling you on this public YouTube channel as well, also inside Leverage University, we talked about picking up SOXL calls and XOXL shares underneath $10. So congrats to anybody that won on those. Maybe you're locking in some profits, taking a little bit off the table to pick more up lower. But SOXL was a great move off the lows, and it's another great way to hedge as well on the downside. So yeah, you're absolutely right. Appreciate that. Yep. FOMC minute meetings on Wednesday. Yeah, we talked about that. Appreciate you, Tanvir. So Tanvir is talking about hedging it with NVIDIA earnings. So it's a lot less expensive. So for example, if NVIDIA has really good earnings, great. You're already in SOXL, and you could look at longer dated SOXL calls if you consider NVIDIA to go up. Right? Look at the contract prices on these for even June 20th. So if you consider NVIDIA to have a beat on earnings, you could keep it fairly in the money and look at those 17, 16, maybe even 15 calls, depending on your account sizes. And you can see they're $200 to $230 to $150. Okay. So if you're bullish on NVIDIA and you want to, consider some options, great. You can look at SOXL. Now, like we said, on the downside, what if you consider that NVIDIA is going to have poor earnings, or there's going to be a pullback? I don't want to say poor earnings, but just a little bit shaky. Okay. And SOXL and the semiconductor sector pulls back, which would pull SOXL back to $10, roughly $10 to $12. Okay. Well, you can have the hedge, as Tanvir was talking about, and you can look at those put sides on SOXL, roughly 15 puts, maybe for June. Or if you want to go further out, if you're that type of person, I would go to July 18th is another good date there, and you can have that pullback, right, for the semiconductor sector throughout the summer. Okay. So appreciate you, Tanvir. Yeah, I love SOXL. Great hedge option, less expensive. and it moves. If y'all don't know what that is the directional bullish semiconductor ETF. Okay, 2-time semiconductor ETF. All right. Now, long term, I would definitely have shares in SOXL. You can start a position, or if you never grabbed any shares, I would definitely look at SOXL anywhere right around here. But if you can grab it underneath 10 or near $10, that is an amazing, amazing pickup, because when AI booms and when these chips get figured out and when all these tariffs start, fading out, which it will over time, look at what SOXL did when the chip sectors were booming back in 2023. It went from $15 to $70. So can you get 100 shares of SOXL? Can you get 1,000 shares? Can you get 500 shares? Right? Try to target that 100 shares of SOXL plus if you can. If you're bullish on chips, semiconductors, and AI in the future. All right. What indicator are you using that shows the gray gaps on your charts? Appreciate you, Neil. Yeah, it's not an indicator. It is, as you know, I use Webull. So if I go to my chart settings, okay, so all I did was right click on the chart, right click, chart settings. I go to chart display, and I can show the candle gaps. All right, and I just choose the most that is available. Right now, what if I didn't have those and I choose none? Right, that's how a lot of trading view charts look. That's how a lot of when you see traders on other lives that you may watch and they're using Thinkorswim, right? That's how it'll typically look. Just look blank, and you kind of see the gaps. All right, there's a gap, there's a gap, and you'll see futures traders as well. Like, oh, there's a gap. But that's why I personally love charting and, doing most of my stuff on Webull, is because it has little bitty things like that just fit my eye. I can see the gaps pretty clearly right there. It's like, hey, there's a gap. And I've had people ask, where? What gap are you seeing? All right. So I can see it on a daily. I can see it on a 30-minute. I can see it on lower time frames like that. Pretty clear. So I know what's coming up, and I can enter confidently with low liquidity through there for calls, so on and so forth. Hopefully that helps, Tanvir. It also helps as well that, typically I know when a pullback is going to happen, or if we keep gapping up. And if we get underneath that, 575, 577 on SPY, there's a gap and there's nothing but room down to 570 and probably 568. So anyone who trades on Robinhood, I have nothing against Robinhood. As y'all know, one of my top videos on here is on Robinhood Legend. It doesn't do the gaps on Robinhood Legend, right? Like this. So you can still trade on Robinhood or your respective brokerages or whatever you trade on, right? But just know that where the big moves are going to happen. So if I'm here and I'm on Robinhood and I'm traveling or doing other things or whatever, and I just happen to trade on Robinhood, I already know that underneath 575, there's a gap from 575 all the way down to 565, right? With little stopping points in the middle, right at 570. So if I look and say, oh, I wake up in the morning and SPY's underneath 560, is 575, it's in the gap. It's going to 570. I think that's the key in trading, more specifically, is knowing where things are headed next, right? Because entries are very important in trading. Or where your buy levels are if you're a long-term investor. If you know there's multiple gaps down to the downside, right, more specifically on SPY, you're like, man, if I want the best buy up pickup, I want to buy anything on SPY or the S&P 500 closer to 550. I do not want to buy any shares necessarily heavy until it gets back to 550 minimally, because that's where the big money's buying. Right there, previous rejection, right there. And ideally, you want it even lower. Back to 515, back to closer to 500. So now you've got two buy zones. If someone's a big long-term investor and they're looking at their long-term brokerages and wanting to buy the S&P and whatnot, you can dollar cost average, but I'm talking about buying heavier. Cool. All right. I'll give some quick levels on some stocks. I'll just give you some levels on Google, Amazon, my favorite watches, and then I'll give you some big swing trades into the summertime. If y'all want to, if anything else, please go ahead and put it now because I'm wrapping up. I'm gonna be speeding up my speech a little bit. All right, let's go through our Mag 7 here. Google. I've been loving Google. It's one of my sleepers. I know a lot of people don't talk about trading Google. They're all on NVDAs, all on Teslas, but Google can make you a lot of money. It's a very good, high volatile, I would say, mover, but the contracts are not that pricey. So you're not trading a Tesla significantly out of the money if you don't want to risk that. And I know a lot of people do that, and that's perfectly fine. But if you want something a little bit safer, a little bit, you can put some time on it, but you're not spending $800,000, $900,000 on contracts. Maybe you only spend $300 or $400, but you can get 3, 4, or 5 contracts and put time on it. Put Google on your list. If you're not inside leverage, maybe you don't know, but this has been one of my favorites as of 2025 in a Trump market. Before, in a Biden market, not necessarily, because it was not moving. But now you're getting $5, $6, $7 moves on good days, $3, $4 moves for day trading on Google. Right. And Google has big gaps below. It's moving really nicely. So here is my levels on Google. Here are my levels on Google. Excuse me. After hours, it's sitting. I want you to watch 574. If it's underneath 574, okay, that is resistance. Okay. You can see right there anywhere, not 570, godly, 173, 174. Okay, 173, 174. That is resistance. Okay, underneath 174, 173, that is resistance. So if it's sitting up there right now, it's in resistance. Okay. And it's sitting right at 170 and some change. Okay. So my next level of resistance is sitting right here at 171. And why am I talking about resistance? Because Google is sitting underneath and rejecting the daily 200 moving average, that orange line, and also the daily 100. So it's rejecting pretty big moving averages there on higher daily time frames, as you can see. Pushed up into there, rejected from 176 and pushed all the way back down to 170. Okay, that's a pretty nice sell candle right there on Google. Okay. So if it pushes back up into here, fails underneath 170, right, we can get a pullback into 164 would be your lower level right now. Okay. 164, 165. $164,165. If Google fails back underneath 164, if at any point this week or whatnot, it fails underneath 164 or pulls back underneath there and turns that 164, 165 into a rejection, and the market is also selling over the next, couple of weeks or so, do not be surprised to get that Google pullback into some of these gaps below. Okay. Now, I love Google long-term as far as, picking up, getting that rotation all the way back to 200 plus. That is really what I'm looking at. Okay. So if you do not want to trade Google on the downside, keep it on your watch for a sleeper in the Mag 7 that has not really run. It is still lagging a little bit, right? If we can get Google back down underneath $150, I would say long call positions, like it will be a rotation. I wanted Google back down here personally, like back down to that moving average 140, retesting it somewhere like this, getting that retest and then taking off like that. Okay. So keep Google on your watch for any of the tech, for a tech or Mag 7 long-term calls, long-term shares, if you do not want to trade this downside. Okay. The reason also why I'm looking at downside is you see this top wick here, and also maybe this bearish kind of flag position here. If it starts to fail underneath that 165, something like that. Okay. So I'll be watching Google pretty heavily. As the market has been very, very volatile, Google's been very nice to trade. So I'll be watching it. If you want to trade live with us, or if you want to see more, what's happening intraday, join Leverage University. Let me know if you have any questions about it. But other than that, watch Google above 164, 165. It could be bullish and rotate back up. Or if it gets underneath that 165, then we could rotate back down. Amazon. I'm really I've been kind of looking at this 215 level, but again, daily 200 moving average here is going to be very key of what it does at the daily 200, which was that orange line. So that's really all I'm paying attention to with Amazon right now. If it's above that daily 200, above 202, 201, then it's going to try to rotate back up to the highs to try to retest 210. Okay. So those are the levels I'm watching at on Amazon is 201, 206, and then 210 plus. 201, 206, and 210 plus. Okay. Also, please let me know at any point in time that someone's confused or, hey, what do we do at those levels? That's where, things kind of get a little bit, tricky. Is I can give levels, but you have to know what's going to happen above that 206. It'll push up into that 210. And then from 210, what does it do at 210? Is it above 210? Okay, it's trying to go to 215. So it's just stair stepping its way to levels. If it rejects 206, right, then we're coming back to 200. If it gets underneath 200, there's nothing but room down into 195 and 193. That's all trading is, more specifically, is watching these big levels of reaction of what happened last time. Above this 201, it's going to go higher to that next resistance. Above that resistance, going to go up to the next one, and then so on and so forth. All right, Apple. Apple's been one of the weakest out of the bunch here, but you can't count it out. So I'm going to get rid of some of these lines here. Apple's been a little bit weaker out of the bunch. I want to watch. It's almost identical to Amazon as far as the levels. It's kind of eerie. I to watch what I'm on sometimes. But Apple, as you can see, is broken trend a little bit here. Broken that trend. And it's going to try to retest roughly around 200 to 206. Same numbers. So Apple above 195. Okay, it's going to try to push to 200. Above 200, we're going to try to go to 206. And if we get above that 206, 207 area, then, we have some squeeze action that may come in if the market's strong. Okay, so you do not want to short into this 195 and then 193 area. If you can see a lot of support there, a lot of support, and a lot of room back to the upside if some news comes in or something happens. So when Apple's strong, the market's typically strong. So that's a little bit, more concerning of, if the market may squeeze as well if Apple gets somehow strong. But we'll see. We'll see what happens. I'm looking at it on Apple. And Apple's sitting at 197, so it's still underneath that 200 level. But there is still going to be a gap here, so it's sitting right there. So if Apple breaks above there, it'll try to push up into 200. So I wouldn't be surprised if the market gets a little bit strong tomorrow from that nice recovery of the weekend, and that sell-off kind of last week recovers and then maybe pushes down. So that's kind of my sentiment for tomorrow. We may see a little bit more of a recovery tomorrow if the market gets back above some of these key levels. All right, Microsoft. Market's such in a indecisive way. It's like some of them are just overextended. Okay, Microsoft's at 455. I really don't like anywhere on this level of Microsoft up in this range. It's at 455. So it's going to try to get back up to 460. And if the market gets strong, it's trying to push up to that top end of the level there. But what I like on Microsoft, you already see what I like. But it's got to show some weakness first. A little bit more drastic. The market, SPY, QQQ, got to show some weakness. I'm just looking at this, getting heavy. And something like that. That might not happen till later, as Microsoft has been super strong after its earnings. But that is a lot of risk to reward back to the downside with those gaps. And something's going to happen. We called it on Lily. Something's going to happen. We don't know what it is. They're going to come in and say, Microsoft CEO did something crazy. Something's going to happen out of nowhere that's going to shock everybody, and Microsoft's going to be back down in this gap. Guarantee it. I don't know what they're going to do. Tariffs are back on. Microsoft chips are burning up. I don't know what it's going to be. It's going to be something. They're going to manipulate it to pull it back. So I just know 460 to 465 is going to be pretty heavy for Microsoft as it's approaching back to its all-time highs. And the market gets strong, great, but you can see what's happening up here. Heavy resistance, 455, heavy resistance, 465, all-time highs with a big gap below. Come on now. It's like giving it away, but we just don't know when it's going to happen. Meta, same type of deal here. Meta's been having some kind of negative headlines as of late. I love the structure here. Meta's a pretty big player. See that 660 rejection, lower high, another lower high, and then rejecting underneath 640, 650 as a psych level. Underneath this 640, look what Meta did last time when it got underneath this 640, underneath 635. It started to fade a little bit, harder there. So wouldn't be surprised. Something comes in. Because if Meta or Microsoft end up having some significant profit taking, what do y'all think is going to happen on SPY and QQQ? Everything we talked about. That big gap's going to start filling. SPY, big gap is going to start filling. So if you see that, I'm not saying it's going to happen tomorrow, but if you see it and you see significant red at some point over the next couple of weeks, you already know what we're talking about this today. All right. So I want a little bit more confirmation to enter it. But if we go any higher, I would look at those June 20th puts for a lot of the tech sector. I would look at a lot of those June 20th puts over the next couple of weeks. Okay. SQQQ calls as well. That's another one you can look at to hedge. So you can start picking some of those up this week if you'd like. SQQQ calls out into June 20th. Congrats to anyone who banked on those from last week when I talked about them. I talked about the 25 calls into June 20th, and we talked about July 18th. You can look at the 30 calls, and if you have a bigger account, you can still look at 25 calls for July 18th. SQQQ. Okay, SQQQ. You can do shares or you can do long dated calls. In my opinion, be the easiest money you make. When the market sells off over the next month or so, or whenever it does during the summertime, it'll be a day, it'll be something. It'll just cool off pretty significantly. All right. By July 18th, by the FOMC meeting, we'll see SQQQ minimally 27. Good with that? All right, how are you looking on time? Jeez, 5 o'clock, been an hour and a half. Check chat, we good. Yeah, 651 this week. Yep, we're in the same alignment, Tanvir. I wouldn't be surprised if the market pushed up a little bit higher this week. So, yeah, at the beginning of the week. 205 Google Leap that ends in December. Yeah, I'd keep picking them up if it's lower. I'd keep picking them up. I think that's an awesome leak. I think Google by the end of the year could be definitely 200, especially if we squeeze towards the end of the year and everything comes out well with all these. If we get some rate cuts and so on and so forth. Yeah. Keep stacking those Google leaps in December. Cool. This is what Neil's talking about. Okay. It's got some 205s the end of December. Okay. So he spent roughly, if he's spending at the lows, right? If he got it at, 147, 150, 155, he got some Google leaps. He should be up on those, right? So the reason I can know exactly how much he paid, not to be in your business, but if he got him at the lows down here, he spent roughly about $230. It reached a high about $800, pull back a little bit to $600. So he's still up, right? So if Google pulls back a little bit more, he could pick up more or just hold that original position. Now, guess what? If Google goes to 200, it's 205s. If it goes back all the time highs, you're turning roughly $200 or $300 into 2,700. Okay. So that is through that gap fill right there. So here's how that could look. It could go from here, right? Or since he's got time on his contract, which he probably doesn't want to hear, what if it pulls back first, back to 150, fills those gaps back below, and then takes off from there? Either way, you're good. So that's what a visual look looks like that Neil has Google leaps out. Now, I missed my entry. For those inside of Leverage University, you already know I called this out. I can show you inside the community, called this out. So a lot of you caught it, but it just kept gapping up on me. And I was looking for a pullback into 150 to fill those gaps and then take calls into June. All right. And I was targeting 175, 180, and it already made the move very, very quickly. Okay. So now I don't want to chase this up here. I'm going to be looking for my entry on those long dated Google calls closer to 160. If possible, I'd like it closer to the 155 level, if possible. Okay. So don't know if I'm going to get it. If it starts to settle above 166, 165, this could just simply be an inverse head and shoulders and could take off. Okay. So that's why I think Google's chart is a sleeper and it looks really good back to the upside. It's been lagging from everything else. Also, the daily 20 is sitting at 162. Yeah. Pulls back to there, something like that. All righty. Man, it's been good. Can I get gotta bounce? Have a great night, y'all. Appreciate you. TA for UNH. Yeah, this is a final call. TA for UNH. Yep. Appreciate y'all hanging out with me. I know this is, my YouTube videos are not this long. They're typically about 25, 30 minutes. That's just because I want to make sure to go over every possible scenario so you understand. But stock summer Sundays are always typically about an hour and a half. TA for UNH reclaims 300. I would say 305. All right, reclaims above 305. Okay, I think this could take off this week potentially. Look at this break here. See that break of structure right there? How it broke out, retested, gets above 305, 300 first, and then above 305, that's where that pivot point would be, in my opinion, because last time it got here, it got a little bit heavy. 305 pulled back. So I would look for above that 305. That's where you could get maybe that squeeze if the market gets strong right there. Okay. So watch 300 and 305, Tenveer. 300 and 305. 300 and 305. Now, here's the negative, not that's a negative, but if it pulls back, if I mark that level right there, it's looked like it's holding up 290 pretty well. So I marked that as your initial support. So you need to be mindful if the market does get a little bit weak and SPY starts to pull back, if it breaks below that 287, right, we could retest closer to 250, 260 again. Okay. So watch that 290 level this week. And it seems like you're a pretty patient trader as well. From what I'm seeing, the question that you asked, some TA on it. So you could see a continuous little downtrend profit taking potentially. But if we do get strong, tolls at 290, reclaims 300, psych level reclaims 305, 306 maybe, then we can get that squeeze back into that 320, 330, and then targeting, we're trying to target this whole drop pretty much like that over time. So is this just a little higher low consolidation to pop off pretty soon? Because we know, or if I've talked about in that healthcare video, healthcare is typically a defense sector, okay, over time. So people move their money into beating down healthcare stocks because typically they do pretty well in a recessionary period or when there's fear in the markets, so on and so forth. Okay. So keep UNH on your watch for anyone. If you're already in long leaps, if you already grabbed up some shares, still a great opportunity. While we're on healthcare, keep an eye on Merck this week as well. Okay. It's got some really good, I talked about it before, but it's got some really good positive catalysts this week. University, shares, Merck. So I want you to take a look at this calendar here on Merck. On the 27th, which is tomorrow, they've got an annual meeting of shareholders. So most likely they're going to be talking about some positive things because why wouldn't you as a shareholder? On the 29th, which is on Thursday, they've got a strategic decisions conference where they're participating. On June 2nd, they have an investor event. So you have these quote unquote positive events or things that they may be talking about what's new with Merck, what's going on, what's going to be hype for the coming quarters. Typically when you have stuff like this, like an investor event, and a stock is beaten down like that, right? It's typically trying to, consolidate into some type of bullish nature. So I'd keep an eye on Merck this week. Do not be surprised if it does try to start building in that investor event or over the next couple of weeks, Merck tries to, do something like this. Okay. If there's positivity or if you see volume, just keep it on your side watch, turn your alerts on. Maybe turn your alerts on if you see Merck above 80. So if you're in Robinhood or if you're on, Yahoo Finance, whatever, just turn on your alert and say Merck above $80. Okay. That is where you want to start paying attention to it more intently, above 80. Okay. So Merck, I keep a high alert on, and it's also got earnings coming up on the 29th of July. Okay. And it's also been beaten down. So could it come lower into 65? Yeah, it could. Could earnings come out poorly or whatever and they still fade and fade and fade and fade? Yes, they could. That's why you still got to keep a watch on it that it's not completely broken out yet. It's still got to get above some key levels, kind of above 85 and then above 90, it'll start moving. But I would keep a high alert on it personally, kind of coming into the next couple of weeks and the next couple of months, especially as healthcare starts to build. All right. It's got some gaps to fill up here at 96 and then 100. So yeah, I'll see that happen in probably the next couple of months. RSI also overdone on a weekly time frame. You see it's consolidating down here. Last time it did that on a weekly time frame, Merck went from $44 to $65 in a matter of, a couple months or so. So Merck, Lilly's also been beaten down. So I think Lilly will probably come down and fill this gap here if the market pulls back. So just pay attention to that. But yeah, healthcare still on watch. Man, there's so many things that I can, consider talking about. Cybersecurity, PanW. Now this one could be some easy money. Now I'm just talking. If y'all got to run, you're more than welcome to. This is how I talk to my Leverage University members. But Snowflake had a really good earnings. As you can see, popped up multiple times here. Their earnings popped them up from 178 to 205. And now there's some profit taking. This is a solid sell daily candle, in my opinion, solid inverted hammer candle, which is typically a sell signal. These also have overextension on the RSI here with gaps below. So I would pay attention to Snowflake, that it could be a nice put side trade if you want to trade the downside on Snowflake back to roughly around 185, 190. So we'll take a look at it if it picks up volume, but we got to be mindful that it is still very, very strong on a weekly, as you can see, forming higher lows, higher highs, so on and so forth. And it might want to just pull back and then go higher. So I'll keep an eye on it, but it is kind of giving that shorter term daily sell signal. I'll probably watch it if it breaks back below 195. All righty. Well, bid prices. Merck calls are rough. Option spreads were very widespread in the past. They've tightened up a little bit. I appreciate you mentioning that, Tanvir. So yeah, you got to pay attention to it. Got to catch the right one. I only put time on Merck contracts, right? So I look very specifically about which contracts I would select, and I always put time on it. So for example, if I'm looking at this 85 call, right? I know there's a little interest on the 65 put there. So just keep it on watch. I'm a little bit more strategic when I do trade Merck or a little bit wider spread stocks, but I put time on it. And I look for typically on Merck roughly about a 5 to 6 point spread, which is not bad for, in my opinion, a swing trade or, kind of that mid mover. 85 calls, or further out, we can go down to August. A little bit more interest on there, a little bit more volume. Not volume hasn't picked up on those, but those are a little bit tighter too. All right, so if I've got my targets on those, I'd probably look at something like a 85 or a 90 call and give it at least 2 to 3 months. So glad you mentioned that. Yep. All right. Any final thoughts from anybody? I apologize for and more specifically me. I usually like having my banner up and all those things. But if you want to join Leverage University, if you like these, give me feedback in the comments, maybe even after the video. I know I have a lot of viewers on here today, a lot of views that have come in, come out. That's perfectly fine. Appreciate those that stay. If you do enjoy these videos, let me know what you'd like to hear. But other than that, let me know a one in the chat if there's no final things this week. So in summary, if you want to take it easy, I would pay attention to those June 20th puts for SPY, QQQ, and potentially IWM. Okay, I would take a look at those puts out into June 20th if you have a bigger account size that can handle those larger contracts. If you're somebody that's like, hey, Brian, I'm new to options trading more specifically, then you want to consider a hedge that's safer, I would look at SQQQ calls, minimally June 20th. Okay. You can look out at July 18th for those SQQQ calls. All right. The contract price that I would look at, or strike price, would be the 25 calls that you can look at safely for June 20th, or July 18th, 25 calls. Potentially 130s could move as well. Okay. I'm on a public platform, so I do speak a little bit more safely here. If you're working with me or if you're in our university Discord, then I kind of give a little bit more specifics because I kind of know the folks that are in there and what they're doing. All right. So wanted to summarize that to give you a specific trade that you could take safely. As Tanvir said, that I want to mention again, SOXL, pay attention to that as well, because that will be affected by NVDA. Long term, you want to be picking up SOXL shares, ideally around $10 or under. If you can catch it 10 to 12, that'd be great. If you want to start your position now around 15 for shares, if you don't have any, great, but expect to potentially buy lower to try to have an average cost around that 10 or under. All right. That will be an easy double up over the next couple of years for SOXL, as we may have a pullback in the semiconductors and then they shoot off to all-time highs. Everyone loves NVIDIA and whatnot. All right. So that's my summary this week. It is a short week. It is the end of the month. A lot of data. If you get those breaks into those gaps, great. You can take puts down. If you're only person that sees it going up, expect a pullback this week potentially with those key data points. Okay. If we break all-time highs and, hey, Dr. B, you were all wrong, I do have that sentiment in mind. So I'm not coming here saying we are going to do this. That is the primary sentiment. But if we break above those previous highs, that means if we break above QQQ, goes above highs of 524. If we break into new highs, we're going to push up into 530, right? And potentially higher. Okay. So if we break above 524 on QQQ this week, maybe something happens, something comes out, fine. We break a new highs, then we're pushing higher. All right. But the higher we go, I'm looking at longer dated puts. The higher we go, I'm looking at longer dated puts. SPY, if we break above 596, then we can push up into 600. Break above 596, we can push up into 600. Okay. Closer to 600, I'm looking at long dated puts. Get my sentiment now? So I'm not really interested in trading calls back up to the highs personally. I just wanted to keep pushing and pushing, or look for those sell signals to get me longer dated puts because we're overextended right now. All right. That's my sentiment. So if you're not cool with that, you only trade the upside, I would wait for a pullback, be patient, wait for that quote unquote doomsday to come, and then you pick up your dip. Do not get trapped at these highs as it continues to grind higher. All right. Cool. Well, thank y'all so much. Appreciate you. Thank you for being live on Sundays as usual. Man, appreciate y'all, Tanvir. I definitely could have said, hey, not coming. But wanted to make sure to get this out of here. Appreciate y'all. Thank you. I've been saying it multiple times. Peace, love, and blessings to you.